So, firstly, let's start with the occupiers market. As you can see, rental levels are close to the bottom. They continue. Only in the CBD of Madrid, we have a very slight increase on the rental prices of only 25 cents in the last quarter. But probably we are going to finish this year in levels of 25 or 25.25. So it seems like the market has started a recovery process, but it will take time. Okay. At the same time, market is polarized, and what is happening in the CBD or secondary center, where we have 13% of vacancy rate, is completely different with the A1 and A2 axis, where we have 22% roughly, and what we have in the A6 motorway, that in my opinion is a niche market. But what is really important is that the periphery is suffering a lot. It continues and it will remain suffering for the next probably year and a half or couple of years for sure. So apart of for CBRE, the prime rent is 24.75 euros per square meter per month. We have some evidence that we can sign contracts in levels of close to 30 in the main buildings, in the most appealing buildings in the city. We have some transactions in levels of 28, a couple of them, 30, a couple of them, even we have one in 35 and in 34. But very, very specific buildings, very demanded buildings is where we have these kind of transactions. And for not a really big surface. The gross take-up. Demand continue being really, really weak. As you can see, we have an improvement for the last 4 quarters. But if you compare that with the peak of the bubble, we continue being really, really weak. Look at this. This is probably what we are going to have as a total take-up of this year. And it was the total of just the 3rd quarter in the peak of the bubble of 1 year. Actually, if we see this chart, you can see that comparing with the average of the last 10 years, in the case of Madrid, we have a decrease on the take-up of 40%, less than the average. On the other side, you can see Dublin, where the market was suffering a lot, but currently they are having more than close to 17% over the average in the last 10 years. So the recovery process in Dublin took place earlier than in Spain, earlier than in Madrid, and is becoming much more active in terms of demand of surface than Madrid. Another important trend is that 56% of the total letting transactions are taking place within the M30. And this is only from the beginning of this year to the 3rd quarter. But taking into account what is going to happen this quarter, probably we are going to finish this year in levels of 58% of the total transactions signed in the CBD and in the city center. What means that rental levels are so affordable for the companies that they are moving from the outskirts to the city center. And this will continue probably next year. According to our macroeconomic and econometric model, we need to reach levels of 30 euros per square meter within the M30 to start seeing some demand in the external side of the M30. So it will take at least 1 more year until we see more demand in Las Tablas or close to here once we cross M30. New supply is almost stopped, but is coming. I mean, some projects are coming, very few ones, but some of them are now on market. We are going to see more projects coming to the market, is what we expect, because this chart shows at the current pace that companies are demanding on occupying grade A buildings. By the 3rd quarter of 2017, 3 years time from now, we are not going to have any square meter free in the city of grade A. So we need to start refurbishing the stock. Is very obsolete. As you can see, we have very old-fashioned buildings in the city center that probably for the last 7 years it didn't make sense to start working in that buildings because the rental levels were so low. But currently it made completely sense to start recovering, start working in that buildings. And we have some examples of very successful investments. Like in the first quarter of this year, we sold a building, a very empty building, completely obsolete, very close to Santiago Bernabeu Stadium. And the developer, the investor that purchased this property has very recently sold to Associmi that property when they have signed a contract to be sold when it's completed the project. So it seems like demand is very keen to occupy this kind of new buildings coming to the market. Okay, new buildings or redevelopments or refurbishments. So let's go to the investment market. 1.5 years ago, roughly, before summer last year, the trend has changed dramatically, and international investors were then focused in Central and Eastern Europe. But it has changed, and currently they are very focused in the peripheral European countries, and mainly in Ireland and in Spain. So if you see this chart, you will see that after last summer, not last summer, but the summer on 2013, the investment in Spain was growing and growing, and we will see later that we are growing in terms of turnover in the commercial real estate market, in terms of doubling each year the total volumes invested the year before. So we expect to have this year more than 9 billion in transactions, which is a lot. It's close to the peak. In the peak, we used to have 10 billion was the total transacted. But of course, the capital values were completely different. So in terms of transactions, in number of transactions, and in terms of surface, it's completely different. We are probably historically in the most active year that we have seen in Spain. What kind of capital is coming? As you can see, Madrid is now receiving, but we continue receiving a lot of opportunistic investors, but this is changing, and we are receiving more institutional capital, we are receiving more value add and core class investors, and we had some transactions that we can discuss later when I finish this presentation. The reality is that if you see the spread of the average on the capital values of the first 5 markets, offices markets in Europe, if you compare the spread with Madrid in the peak of the bubble, and you compare how big is the spread now, it's really huge, the difference. So we expect that this is going to be narrowing and narrowing for the next 5 years until we converge again, as we did these years, where the spread was almost the same. Okay, and we think at some point this is going to start changing, probably at the end of next year, and the capital values will recover more than 50% in the next 5 years in Madrid, in the Madrid offices market. So roughly little more than 10% of increase in the cap values per year. Actually, if you invest now and you deflect the cap values currently, you are investing in levels of 1998 in Madrid. So it seems like it's a bargain, and for that reason a lot of investors are taking positions in our market now. Actually, we had 5 really big transactions in Madrid this year, over 100 million. This is quite strange in our market, it's not very common. And one of these transactions, we can talk about that later, because this is on market and is not completed, but it is going to be probably end this transaction before year end. But we had kind of a really big refurbishment like Edificio España that was purchased by a Chinese investor. We have very close to here, where our headquarters in Spain are located, we have Castellana 150. It is a mixed-use scheme with a retail gallery, 2 office buildings, and a hotel, which is an ongoing project currently. But also we have the Vodafone headquarters that has been very recently sold at the beginning of this year, and also the IBM headquarters in Madrid. Well, in Barcelona, it happens almost the same. They had 3 really big transactions, over 100 million. In 2 of the cases, it's really weird, because in 2 cases, 2 office buildings are going to be changed the use to convert them to a hotel. And the other one is kind of a sale and leaseback, because it's a fully occupied building by Telefónica that is a PPP project that was developed by the City Hall of Barcelona with a private investor, and now they market that building in levels of 107 million to Telefónica. Public disposals. We had a very big public disposal in Barcelona last summer. It was closed in levels of 7.5%. The total volume that was transacted were 13 assets at a price of 201 million euros. The company that purchased these properties were Zurich, the insurance company. Last year, AXA Real Estate, they purchased on behalf of AXA Insurance Company another portfolio of 13 buildings in levels of 9.25% yield. So we had a really big yield compression in these kind of portfolios, and I can anticipate you that probably before year end we will have more public disposals, really big public disposals here in Spain. This is a really big trend, and in my opinion we will continue seeing more really big portfolios of properties transacted in the country for the next years, since the national, regional and local governments, they need to dispose some of these assets that are weighting so much heavy problems to the budgets they have each year.
Patricio, can I just ask, in terms of the overall kind of value or amount of the public assets that are seeking disposal, how large is that? I mean, how much more is there to come? Approximately, just as a...
Well, it depends, because we are going to see some auctions from different... the City Hall of Madrid is continually disposing some assets in an auction process, but what we think is that the regional government of Valencia announced that they would like to make a really big public disposal. Andalusia has on market one really big project. La Generalitat de Catalunya announced that they would like to continue making some disposals. So it's quite big, but we don't know exactly how big will be this kind of disposals. I think really big ones like the Generalitat one in levels of 170 million or the last one in 200 millions are really big transactions. We don't think we are going to have much more of these kind of really big portfolios, but probably they will market some portfolios of 5, 7, maybe 10 properties. Okay. This is the evolution on the yields on the different sectors, and as you can see here, we had a really big compression on the yields for the last 3 quarters on each market, but the one that has compressed more is probably the shopping centers industry. Some shopping centers that we tried to market 1.5 years ago in levels of 7.25% are now currently transacted in levels of 5.5. And we have had some really big transactions like Marineda City last summer, a really big scheme in levels of 65 million that was purchased by Asocimi. Roger probably can talk about how Asocimis are active purchasing retail projects, since LAR is the one that is more specialized in the management and in the purchase of these kind of properties. They have a really long expertise, and they have signed some transactions, very, very nice transactions. But anyways, in the office market, we have seen for the last quarter a flat behavior on the market, but probably we will compress at least 25 basis points, either in the shopping centers, in the logistics, and in the office market from now to the year end. So we will continue compressing. Where we are now, if we compare the average in the last 20 years, we are, in terms of rents, sorry, this is Barcelona, this is not Madrid. In the case of Madrid, this is not so big, the difference, but we are slightly in a lower point of the average in terms of rent. We are, in terms of yields, slightly lower than the average, and we are slightly higher in the cap values. Here is more evident, but it's not the case for Madrid. For Madrid, it's more balanced. But anyways, it's like the right time to take positions in the Madrid office market or the Barcelona one. And because of that, we have seen, as you can see here, we have been doubling and doubling transactions, number of transactions year on year. In terms of volumes, this is only from the beginning of the year to the end of the Q3, and at the end of Q3 we had 6.5 billion invested in Spain, but we are going to finish probably levels of 9 billion this year, as I anticipated to you. The average of the ticket has increased from the last year to this year. We have almost doubled again, so market is growing. It's really, really hectic. And we are doubling not only as a total, but in each sector we are doubling the total invested comparing with last year. Probably the highest increase in the volumes took place in the retail market and mainly in the shopping centers industry, where we had really big transactions like Isla Azul, Diagonal Mar or Marineda. But we had a lot of transactions of really big portfolios like the one that Clepier sold to Carrefour, or Basnet sold to a group of investors led by LAR and Baupost and Greenoak. So it will continue probably, but the market is going to be more narrower since I think there is not the kind of product that investors are looking for in the retail industry, so it will be lower, in my opinion, next year, the total invested in that sector. However, in the office market, probably we will continue growing, or at least we will continue the same activity. This is what I told you. Our expectation is to finish this year in this level of investment. So it's like going back to 2007. And what we expect for this year is to finish in this level, but we don't think we can break this record again next year. It is going to be really difficult. In terms of Madrid versus Barcelona, what is more active? Madrid is almost doubling the total invested in Barcelona, but it's also the double size of the market. So it's like very balanced situation. This is the most appealing sector. It seems like it's retail and will continue being retail until the end of this year. Where the capitals are coming from? Well, here is not representing the reality, since it seems like 44% of the capital invested in Spain is from, is local, is domestic, and is not. It's because of the SOCIMs. SOCIMs are Spanish vehicles, but the reality is that 80 or 85% of the capital that are inside the SOCIMs came from outside again. So the reality is that probably 85% of the total invested is foreign capital. And where is it coming from? Well, it's curious that Asia Pacific will finish this year in levels of close to 1 billion invested in Spain, which is really new for us. I mean, we have not been receiving capital from Asia Pacific for the last 7 years, except from GIC, which was investing in Spain for a long time. Then they left the country, and then they came again this year, taking a really big position in a non-listed property company. Sorry?
No.
Okay. Well, actually, it was in GMP, as you probably know. So, but also from Latin America, we are receiving a lot of capital, and we will continue receiving a lot of capital from Mexico, Argentina, Chile. Chile is very active, I know. Chilean investors, they are not only investing in traditional product like offices or shopping centers, but they are also very active in alternative investment, that they are purchasing like gold resorts in Marbella. Very recently, one Chilean investor has purchased La Quinta, for example, with the hotel. So they are quite active looking for properties now. From Europe, we are receiving capital currently from, I think, every country, to be honest, but what is relevant is that we are receiving capital from Norway and Switzerland. It is not represented here because it was the third quarter when we received that capital, but Switzerland is very active now, and obviously Germany, Netherlands and UK are leading the total capital flows from outside. Big portfolios, we have closed really big portfolios transactions, not only in the private market, but also some public disposals, as I told you, like La Generalitat de Catalunya. But I mean, we have transactions in the office market, really big transactions, also in the retail market, and also in logistics. Gran Europa or Seb Immobilien, they have sold really big portfolios of properties. The IPOs, we have had 4 really big IPOs in the market, and I think it's a trend. I don't know if this will continue. In my opinion, there is room for 1 or 2 more SOCIMIs in the market. But what is for sure is that SOCIMIs that are currently on market will call for equity soon and will refinance the purchases they did. So they will continue being really active, increasing the exposure to the real estate market in Spain. Well, this is the SOCIMIs. What is the opportunity as a conclusion? Well, in bigger ticket assets, in good assets or location with capex requirement, like the Castellana 89 was on market, then it was not. It seems like it is on market again. So these kind of properties with a really big ticket and with the need of a refurbishment, or Castellana 77, they are really attractive for some investors. Good companies over leverage, probably not only public companies or listed companies, but non-listed companies as well. Public sector sale and leasebacks, it is going to continue, as I told you before. NPLs, some currently we can talk about Olivia or Gaudi projects that are on market, and it's important to know that it's key to start separating the good from the bad and analyzing really well what assets make sense to take positions in and what not.